Hi there, welcome back to Market Fatafat. Let's talk about an ET Now exclusive now because sources tell your channel that the government is planning to launch a PLI scheme for electronic manufacturing soon. My colleague Sumita is joining us with all of these exclusive details. Sumita, take it away.
Yes, sources say that work on PLI scheme for components is currently on and it will be introduced shortly. Remember, the IT ministry is seeking for a cabinet nod for this 40,000 crore worth of scheme that will give a push to India's component ecosystem. Now, components ecosystem is critical because India, as of now, is importing components for electronics manufacturing from countries like China, from Hong Kong as well. So the idea is to reduce dependence on those kind of imports for components and manufacture them locally and boost its own supply chains. Let me give you some numbers right here. According to GTRI, which is a think tank, India imported electronics, telecoms gear and electrical products worth $89.8 billion in FY24, with more than half of them sourced from China and Hong Kong. Sources also say that the scheme is in its final phases of planning and it will give a boost to India's component ecosystem. So that's as far as this is concerned. But let me also give you some numbers on India's electronics production. Well, it has reached $150 billion in 2024 and India plans to expand that to $500 billion by the year 2030. And electronics, if India produces these electronics components domestically, locally, that will give a boost to its own domestic value addition, boost to its own companies right here from the current 15 to 18% to 30 to 40%. India's aim is to take that forward in the next 5 years to 50%. So that's as far as this scheme and its details are concerned. IT Ministry, like I said, is awaiting for a nod from the Union Cabinet and work is in final phases.
All right, we'll get you more details on that exclusive, but let's get going with all the stocks that are in focus today. We'll start with you, Ria. Grasim is the name that you picked out for us. This stock has been trading down 1%. Tell us what's the news flow here.
Well, absolutely. So today, Grasim has successfully commissioned a project expansion of caustic soda lye at its Gujarat plant yesterday, actually, with an increased capacity of 400 tons per day or TPD, resulting into an additional annualized revenue of just about rupees 500 crores. Now, if you talk about the capacity, the overall capacity of producing caustic soda lye post this expansion of 400 TPD is going to be 1400 TPD as against just about 1000 TPD earlier. Even after this positive news flow coming in, the stock is still trading with cuts of just about 1%.
Grasim in focus today. Let's talk about a stock that was holding up pretty smartly with gains in the morning on the back of a positive news flow coming in. And that's RITES that I'm talking about. The company has emerged as the top scorer, which is the H1 bidder for an order worth $9.7 million from the Ministry of Public Works, the government of the Cooperative Republic of Guyana. The project involves the provision of engineering services for design, building, financing, upgrading of the Palmyra to Molson Creek Highway. And the said order is scheduled to be completed over the next 60 months, which includes 36 months for pre-construction and construction period and 24 months for the post-construction period. So that's what the order win is looking like. It continues to hold on to some very healthy gains, 2% higher, even amid a beaten down market like we're seeing today on the back of this order win coming in from the government of Guyana.
All right, that's RITES on the back of that news flow. But moving on to the auto pack, Hyundai and Tata Motors specifically, the entire auto pack is in focus today. In fact, it fell in in morning trade today with the leading names like Hyundai Motors and Tata Motors witnessing significant losses after the latest retail figures for November showed a year-on-year drop in passenger and commercial vehicle sales. And now the Nifty Auto Index also slipped 0.4%, reflecting a subdued market sentiment. The spike in auto stocks came after Federation of Automobile Dealers Association of FADA reported a 13.7% year-on-year drop in passenger vehicle registrations to 3.22 lakh units in the month of November. The commercial vehicle sales also fell by 6.1% during the period to 81,967 units, reflecting an uneven demand recovery. Now, the weakness in the auto stocks is due to the demand concerns, particularly in the passenger and the commercial vehicle segments. The inventory levels in the passenger vehicle segment, although reduced, remains high at 65 to 68 days posing additional challenges for the dealers. That's what the FADA president CS Vigneshwar said, and the decline in the PV and the CV sales was attributed to subdued wedding season demand, spillover effects from the late October Diwali and weak rural demand. So that's the word coming in from FADA, and on the back of that, Hyundai Motors, Tata Motors and the auto pack in general is reeling under pressure with cuts of over 1%.
Okay, so auto is not looking very good right now. Let's shift focus from auto and talk about Delta Corp right now, because that's announced a revision to its previously approved scheme for the demerger of its hospitality and real estate businesses. The updated plan aims to ensure the financial and operational optimization of the Dhargalim project in Goa, which is a key component of the company's growth strategy when it comes to the hospitality and real estate space. In the revised scheme, this project, currently in its development stage and requiring substantial capital investment, will be demerged into Delton Hotel and Resorts Private Limited, which is a wholly owned subsidiary of Delta Penland Private Limited. Meanwhile, the remaining hospitality and real estate business will be demerged into DPPL, the resulting company, and upon implementation, shareholders of Delta Corp will receive one equity share in DPPL for every share held in the company. The share entitlement ratio will continue to remain unchanged. So that's the news flow coming here. Some internal restructuring coming in from the company. On the back of that, the stock is up 1% as we speak.
And well, moving on then to our 10th edition of India Economic Conclave, where you will see a whole host of speakers from across the sectors speaking on the various topics that will help India fast track to top 3. We have more than 50 plus speakers who will be sharing their thoughts on the stage of IEC. Jim O'Neill is a globally renowned economist and is celebrated for coining the BRICS acronym. A visionary strategist, he has profoundly influenced global economic policy and investment strategies. O'Neill continues to shape discussions on emerging markets, sustainable growth, and the future of global economic leadership.
So far this decade, partly because of China's challenges, India is already the second largest marginal contributor to global growth after the US, and it's on reasonable course for becoming the third largest sometime in the next decade, which of course was one of the many projections that made the BRIC acronym. When I come to the Times Network India Economic Conclave, I'm looking forward to discussing the structural challenges that India still needs to try and do more on to make sure it is guaranteed that India will become the third largest economy in the world in the next decade or so.
Well, not only Jim O'Neill, but also Randy Zuckerberg, the founder and CEO of Zuckerberg Media, will also be speaking at IEC on how AI will change the future of humanity.
All right, with that, we're completely out of time on this edition of Market Fatafat. Thank you so much for joining us, Snehi, and I will take your leave. Thank you so much, Ria, for joining us. But with that, it's a wrap on this edition. You don't go anywhere because closing trades is taking the market action forward.